Welcome back for another episode of Strive for 25. Joel Farrell here, and looking forward to sharing with you our guest today. Welcome to another episode of the Strive for 25 podcast, and I have a return guest with us today, Jeff Badu, the owner and founder of Badu Tax Services, and he's a serial entrepreneur. Thanks for joining us, Jeff.
Thank you for having me, Joe. Definitely appreciate it as usual.
Cool. Well, I dragged Jeff on the show here because, and this is kind of ad hoc, last second, because there were some headlines about, a flat tax, going through one of the House, and obviously it's going to get stomped on with the other legislators. But I thought it would be a good exercise to talk about this. What would this actually mean for the everyday person? What would it mean for real estate investors out there that have already chosen to go down the path of their investment journey, and all that? So, Jeff, when I know you mentioned that you didn't really catch too much on the headlines because it's not going to go through. But when you hear a flat tax, what's the first thing that comes to your mind when you hear that?
Yeah, I mean, basically, when I hear the words flat tax, as counterintuitive as it may sound in the word itself, but inequality. Just because, some people will feel, hey, I'm making X amount of income compared to someone who's making triple my income. Why should I be paying the same tax rate as that individual? Right. So that's where the inequality comes in. And so when I hear the word flat tax, I'm thinking, you know what? It might not be the most fair to everybody. It may make sense financially, economically, and all that in different aspects. But I would say when I hear that word, I think of inequality as the first thing.
Okay. What's the second thing?
I mean, second thing is just, it ties back to the first, the whole inequality, like people saying it's unfair. It's only for the rich. I mean, can you imagine paying the same tax rate as Warren Buffett, who, by the way, pays a lower tax rate than his own assistant? I mean, he said this publicly. So it might actually work out, and it might work out to everybody's favor as long as you play the game the right way. And keep in mind, it's the tax code, right? The tax code is meant for you, basically, is for you, not against you. It wasn't really meant to be something that was created that was to be against people. It's really created for you so that you can utilize the loopholes and the strategies so that you can reduce your overall tax liability. So when we talk about a flat tax rate percentage period, then people will still find ways to pay no income taxes. And the folks that are making the least amount of money, they say, okay, well, why is so and so paying no taxes, but I'm all of a sudden paying, a bill, even though we're paying the same quote unquote same rate. Why is it that so and so's taxable income is zero? I think that's the real question we need to get to. But why is so and so taxable income zero, but they're clearly a billionaire, and my taxable income is $15,000, and I have to pay, let's say, a 10% flat tax. I just paid more taxes than a billionaire, although my income is way lower than that individual. So it's a lot of politics, a lot of debates when it comes to that. But I would say unfairness and just inequality are the first two words that come to mind when I think of the flat tax.
Okay. That thank you for sharing that. That does make sense. So the billionaire that's not paying any taxes right now, and there's probably going to be different types of examples of how or what, but maybe you can share one or two of how that person that's worth billions of dollars and generating, how much in income, what's the reason that they're able to not pay taxes or have a very low taxable income?
Yeah, so it's real simple, right? The tax code benefits two main people. One is basically one bucket is the business owner, preferably large business owner, someone who employs people, someone who's putting jobs out in the economy, so that you're avoiding people from going homeless or being, financially distressed. Right? You're putting jobs and you're stabilizing the economy. You're basically adding to the economy, right? You're adding to the GDP, the gross domestic product. And then you have real estate investors, right? Those who ultimately invest in real estate that are producing housing for tenants. Right now, there's a big shortage of housing in the US. And so, someone who basically is putting housing into the market and allowing more tenants to get into those housing, is someone who's going to be benefiting from the tax code. And imagine if you add to that someone who's producing jobs into the economy, now you're really adding to the tax code. So overall, the real estate investor and the business owner, the large business owner preferably, are the two groups of people that ultimately benefit the most from the tax code extension.
Okay, so be, from the first scenario, the business owner who's providing income for people out there in the workforce and providing jobs, stabilizing the economy, adding to the GDP, as you mentioned.
Mm-hmm.
How is that person able to reduce their tax liability? What part of the code, or what's the type of thing that they're doing to minimize their tax event?
Yeah, it's a great question. Number one, when you become a business owner, it entitles you to different lucrative tax deductions. For example, your car, you can buy a nice luxury car. And although, you're using it mostly for business, but even if you get to use it once in a while for personal use, you can write off that car, right? Utilizing depreciation as a deduction. Um, you can you can basically different expenses, right? Laptop and books, education. So sometimes, although you personally benefit from these expenses, you can still leverage them as a business tax deduction. So that's one way, or is basically the business tax write-offs. And then you have tax credits, right? You have the research and development tax credit, for example, which is a credit for having W-2 employees that conduct research on a day-to-day basis. You can get a credit for percentage of their, of their W-2 income. This is how Amazon back in 2018, you might have heard they paid $0 in income taxes because they were getting all of these credits, like the low income, right, opportunity credit and a bunch of credits basically for doing things that the government wants you to do. And they say, hey, we'll reward you in the form of tax incentive to say, okay, you're not paying any income taxes. So in the first scenario, it would be tax deductions and then tax credits that allow you to pay no income tax.
Okay, so you mentioned the tax credits for research and development, right?
Mm-hmm.
Um, and let's say that a company earns 1 billion in revenue, and they've got 900 million in expenses. So then, I guess they'd have 100 million in net income that they can decide what to do with, right?
Exactly.
So I guess that's a good scenario to be in. I guess 10% bottom line EBITDA
Yep.
is it? Wouldn't be bad depending on the industry and company. And
Exactly.
then if they have that, then that the company's going through the year and they are projecting for that type of income, they may say, I'm gonna research and develop and get a tax credit,
Right.
or,
Exactly.
or they've been doing it for a period of time and they'll do it. But if they just, I guess there's probably other scenarios where you don't qualify for credit, but you may just still do invest in your company, right? Buy more assets, buy more inventory or machinery, or buy more software, or invest
Mm-hmm.
in your business in some way, and then that would then go into then be new expenses that would offset the income.
Exactly. Exactly.
Okay.
Yeah. So I mean, just by basically what you're doing is you're reinvesting into your business to grow the business, grow the economy, hire more people. The more you continue that cycle, the better position you're going to be in. And then in the second scenario, throwing that into, let's say, real estate, now you can leverage the depreciation deduction, right, from your rental property and use that depreciation. So let's say you're getting 20% depreciation rate. If you buy, let's say, $1 million property, that's a $200,000 tax deduction that can reduce income or profit on the active or business owner side. Right. So you got your business and then you got your real estate. And whatever profit you make here in your business basically goes into your real estate, and the real estate now can wipe out the taxable profits on your business.
Yeah, and I still have amazing dreams about you using the B word in our last podcast, the billionaire word.
Yes,
I
sir.
mean, that just got me so pumped up to hear that. I mean, I just going backwards in time. I love that story that you outlined with the real estate agent making $150,000 a year and a
Mhm.
couple different scenarios of trying to minimize their tax liability, and then they go buy a multi-family, the accelerated depreciation because they qualify for that as a real estate
Real
professional.
estate
So
professional.
so that real estate professional has that unique ability to qualify for that other than rather than the other layperson with a W-2 job. So,
Exactly.
so when you said, "Hey, you know what? If they keep going down this path,
Mhm.
the B word is possible." I mean, that just gets me pumped up.
Yes, sir.
So,
Let's do it.
so back to the flat tax.
Mhm.
So, from what I'm gathering that you're saying here, because depreciation is really it's really just a paper loss that's I mean there's physical things that are happening to the property that are going to lose value, but for tax purposes, it's a paper loss.
Yeah.
So if down the road a flat tax comes into play, then the incentive to purchase real estate will potentially minimize or lessen because now these tax strategies are going to be minimizing the ability to kind of scale leverage and generate income, right?
Yeah, which basically, tax loopholes, benefits do incentivize certain behaviors. So, for example, if you take away the credits for kids, right, babies, like child tax credit, probably less people are going to have babies, right? Believe it or not.
Yeah.
So, if you're taking away deductions and benefits and all this from real estate investors, then the real estate shortage, if you think it's bad now, it's going to be 10 times worse in the future. Now, people are going to be forced to rent. People are literally going to be fighting to get into places. And that's not good for the economy because that's going to lower things like GDP and, all the different things out there, inflation and, like growth and housing. It's just going to lower a lot of the things that the US government relies upon in terms of data, right? To say, hey, we're doing well, come invest, right? All your international folks, come here to the US. We're going to attract you to come into our country so that you can produce for our country. So when you take away these things and you start saying things like flat tax and, you know, de-incentivize real estate, then you're putting yourself in a rabbit hole where you will de-incentivize or disincentivize people to engage in these behaviors.
Okay. So de-incentivize real estate, de-incentivize building businesses to produce jobs. And so if that happened, let's say it went through, what do you foresee, the effects happening short term, long term, just as an aggregate? What does that vision look like for you in terms of business and finances in the country?
Yeah, I would say short term there'll be a lot of fights, a lot of a lot of angry people. Um, I mean, I think that in general, it's all going to be dependent upon a taxable income, right? So if your taxable income is zero, no matter what tax rate you're in, you pay zero. So the billionaires and the millionaires, multimillionaires, are still going to find ways to reduce their taxable income to zero. So although this flat tax might go through, it just creates new opportunities, new loopholes. So from a short-term effect, yeah, people are going to immediately say, "Hey, how can I strategize to reduce my taxes?" But here's the big problem, though: the folks that are in the lower tax brackets, lower tax rates, they're going to be like, "Wait a second, this isn't fair, right?" Because they've been earning W-2 wages, they've been like working a job all their lives without any business, nothing like that. So they're not really going to understand loopholes and tax strategies and all that. So they're going to be really, really mad, and there's going to be riots and all types of stuff. In the long term, I think eventually the billionaires, multimillionaires, millionaires, they're basically going to say, okay, well, they're also going to come to the realization, why should I be paying the same tax rate? Or basically, for those who, let's say, were able to get in a lower tax bracket, maybe not zero, but maybe they were able to trim it down to a decent amount. Okay, why should I be paying the same tax rate as so and so? So all of a sudden, they're going to do things like maybe slow down tremendously the real estate investing, or they might not hire as many people because they're being, this de-incentivized basically to do those things. So what I believe would happen is the real estate shortage of inventory would be higher because people are not going to want to build as much, um, and essentially what might happen is people who have the real estate now, they might just hold on to it. They might hoard it even more, which is going to force housing prices to go up, inventory to go down, and overall it's going to be less buyers in the market, which is not a good thing really for the U.S. or for the economy as a whole. So on the real estate side, I see a lot of negatives there. I mean, it could be positive, who knows? But just from just from looking into the long term, I would see some negatives there. And then from a business standpoint, depending on what deductions they still allow and all that, then it might also de-incentivize business owners to start a business because one of the reasons why they wanted to start a business was to lower their taxes, right? So overall, whatever comes about, right, whatever loophole, whatever rule gets created, there's always a way around it, right? So no matter whatever happens in the tax code, there's always a way. There's always going to be a way around the code, right? So that's the first thing. And the people that make the money, the people that have the wealth, will find, right? They will find a way. The challenge though is the folks that are quote unquote middle class or lower class, whatever the case may be. Those are the folks that are going to get hit the hardest because they don't really know, either due to them just not knowing, either due to ignorance, either due to them not being able to afford someone who can help really sit down with them and walk through these things. I feel like those folks are going to be hurt the most when when you do something like this. But just understand, whatever rule gets created, there's always a way around it. And I always say this is don't be the one that's caught paying the taxes, be the one that's caught saving the taxes because you did something good for society and the economy as a whole.
I love it. Thank you for sharing that. That, I mean, that makes sense. You know, there's always the good intentions of something, but then there's the reality behind it
Right.
too. And what's human nature going to do? Well, they're going to react, and they want to get back to the way that they know and the way that suits them for the most part within reason. And so, yeah, they're always going to find a way to be able to get around it. So a different wavelength. So, on this channel, talking about building wealth, and it starts with saving money, and it's harder and harder right now to do for so many people with the cost of living going up and wages not going up as much. And so, one of the things that we're talking about here is, a lot about side hustles and what are people doing creatively to be able to generate extra income on the side. And there's a whole list of things: affiliate marketing, online, social media, business consulting, the list goes on, Uber, Lyft, whatever. So I have a hypothetical question for you. So let's say I think I saw a stat that like 30% or 40% of the workforce had a side hustle, which is I think way more than what it was 3 years ago before COVID. Let's say that every single 90% of the workforce had a side hustle, that whatever their income was, they could earn 15% more, that they were going to earn 15% on average more on addition to what they're already making. And maybe it's an hour a day extra, 2 hours a day. Maybe it's from your kitchen computer, or maybe it's something else. Who knows?
Mm-hmm.
How would you envision finances, economics, the way the country works? How does that vision come together in your mind if every single person, or almost every single person, was taking the extra income and then also directly plowing it into savings? So they had their regular job and that their expenses, were covered by their main job. And then all of a sudden, boom, we add in a side hustle. Now it's plowing into savings. And then boom, what happens next?
Yeah, so I mean, overall, I think people would be more financially comfortable, more financially free because they're making more money. One of the things to creating wealth or having financial freedom is income. Right? I think a lot of the gurus, a lot of the experts, they sort of forget about income. They more so think about expenses, how you trim expenses, and how you cut costs and all that. But it really starts with the income. How can I boost my income? So when you boost your income, you're going to be more comfortable. You're going to be able to buy more real estate, for example. Maybe you've never had the savings to buy real estate. Now is your side hustle. You can use this and say, "Hey, this is my real estate saving bank. Right? All the money that's going to be made is going to go straight into my real estate. Now I'm going to buy more real estate. I'm going to make some more money. I'm going to save more on taxes, and just become more financially free overall." Now, with inflation, I mean, inflation is a two-sided thing, and I think right now it's more of a supply side than the demand side. And I wish the Federal Reserve would finally, come to senses with that. But inflation on the demand side will probably go up because now people have more money to spend. Hopefully, they're saving the money and not spending it. But the fact that they have it available might cause some impulse for them to spend the money. So I think inflation will go up on the buy side. On the supply side, I'm not too sure. It depends what we're going through. We had COVID-19, which caused supply shortages, and all these other factors that cause some supply chain issues. Um, chip shortages and all this stuff. But nonetheless, inflation would probably go up, which may mean that interest rates might also go up. Who knows? But overall, it's going to be a better economy. People are going to have more money, more disposable income, more freedom to do as they please with their money. Hopefully, they're saving it and investing it. And I think we would have happy people in the world, honestly.
I think you're right about that. And you know what's interesting about my own journey, I know we're kind of coming up against the clock here, is that like I started this in September. I'm doing 2 episodes a week. I started my Instagram channel in July and I've posted a reel every single day because this platform is all about building wealth and it starts with changing behavior from where you are today. And one big thing is, building habits, and habits take time to do and it takes consistency. And, you know, as I've gone down this path, like I've learned so much in terms of marketing and strategy and mindset. And I've learned way more than about this stuff than in like 6 months than I've learned in my entire life, looking at whatever books. And you learn by doing. And, like these skills that I'm doing on the podcast is also help shape other things that I'm doing with my day job in the mortgage industry. And it's like, well, what if everybody did do a side hustle, they'd be learning more skills, which then can translate to making them more valuable at their job. And then it becomes a self-fulfilling prophecy and things continue to cycle. So um, that's part of our mission here is to dig deeper on this topic and help more people find their niche. Um, last couple things here. So, when we think about mindset and thoughts, right? Your your thoughts, it's almost binary. You're thinking about something that's going to serve you or thinking about something that's not going to serve you. And then that thought, elicits an emotion and that emotion elicits an action. So what you're doing in that moment of time means you're not doing something else. So what have you been spending a lot of time on in your world personally? Because I know you've written several books, you've got seminars, you get a lot of things that you're into. But what are some of the things that you're into right now in terms of planning for 2023?
Yeah, so for me, I do a lot of meditation, just getting my mind right and just meditating, preparing for the day, just preparing for meetings, preparing for moments. So it's a lot of like intangible things, meditating, working out more, so getting more active, even if it's 10 minutes on the cycler or, whatever the case may be, taking walks. So it's more like sort of the spiritual slash mental exercises that I've been doing. I read about 30 books a year using Audible, the audiobook app. So really filling my mind and staying motivated at all times because if I can do that, then anything is possible, right? If I can fill my mind with nothing but abundant activities and abundant exercises, then there's no way I can say, hey, today I'm down or I'm demotivated or whatever the case may be, right? I'm always motivated, always inspired, and that's going to allow me to achieve better results overall.
So the process of doing the meditation, the spirituality, the reading the books, why does that help in this process of staying focused and energy? How does that work? Why does that work?
Yeah, I mean, your mind, I believe, controls 80% of the things that you do, right? So if you're feeding your mind with good stuff, then your mind is going to lead you to better results. Success is really a mindset thing. It's not a supernatural or, hey, so and so has like 10 times more ability than I do. I mean, some of it is physical, but overall, like I wasn't always someone who knew about finances or wealth. Right? I had to first program my mind to say, hey, I want to learn about it, right? I want to stay motivated to do it. And guess what? I end up making more money. So
The
the
byproduct.
process and yeah, exactly. It's all about I want to do it And the more I want to do something, the more I want to become something, then I'm probably going to achieve my dreams. I'm probably going to achieve the ultimate result that I'm.
So the mind controls 80% of what you do, and you're filling your mind with, you said, abundant things. So you go throughout your entire day and you're operating for what, 16 hours, 15 hours, whatever the number is. So, but then how much of your day are you putting towards these types of tasks of filling your mind with the things that you want? How much time in your day?
Yeah, so I use the 888 rule. So 8 hours of my day is dedicated to sleep. 8 hours for work, meaning like meetings and emails and like, just day to day stuff, admin stuff. And then the other 8 hours, 8 hours is for me. So meditation, breaks, movie time, and like just basically things that don't require me to be fully active, like me actually like working. So I use the 888 rule. So to answer your question, 8 hours a day is dedicated to filling my mind with things that I really, really, really want to do. And I do love what I do from a work standpoint. And of course, I love sleeping. And so that's really 24 hours.
Okay, so reading the 30 books, how much would you estimate that you spend on just the books by itself a day on average?
I spend an hour a day reading.
An hour.
And so some books might take 10 hours, like the book that I'm reading right now, You Were Born Rich, right? That's a book that I believe it's like 8 hours. So that's an 8 hour book. So yeah, I mean, throughout a 365-day year, I'll spend an hour a day. So that's 365 hours to read 30 books.
Oh, I love it. I love it. Um, Meditation, how much time a day?
Meditation, I would say at least 15 minutes a day.
Okay.
Right? Some in the morning, some in the afternoon, some in the evening.
But
Can
you do
literally
it
be five.
every single day,
Yeah, every day, every
every
single day,
day.
including
Cool.
weekends.
Include cool. Okay. Because like and that's what I expected you to say. And I think the biggest thing that I've had to learn myself is that like the consistency, just doing it every single day, like that's 9/10 the battle, right? The
Exactly.
process is important as much as the information or the thing that you're doing. Um, but yeah, I mean, this stuff doesn't things that just don't happen overnight. It takes time. Okay. The book that you wrote, right? Infinite. Can you give our listeners the book again?
Yeah, so infinite expansion, right? How to infinitely expand your vision of abundance. And that's out on Amazon. It's a story about my life purpose and also the 12 steps to creating an abundant lifestyle.
Cool. Yeah, it's something that I've included in my routine in the mornings where I cycle in them. I have 3 books that I read a little bit every day, and I cycle them in and out. So that's something that I in my own process. I fill my brain the same way you do, and I love it. Okay, we're running out of time. Any other? Oh, I got to ask you one more question. Do you have time for one more question? Okay. So right now, interest rates have been up and they've been coming down a little bit. Everyone's talking about home values coming down. What's your thought if you're a home buyer out there, an aspiring home buyer, or even a real estate investor that's already in the game? What are your thoughts on home prices?
I personally don't pay attention as an investor. From an investor standpoint, all I care about is two words: cash flow, and that's it. Whether the price is $1 million or 10 million, if it cash flows and it meets my benchmarks, my percentages, then price doesn't really mean anything to me, right? Whether I get in high or I get in low, I'm always going to end up higher anyway. So as an investor, price means nothing, like literally nothing to me. As a homeowner, then yeah, I mean, I get it. You want to buy at the right price, and you're more on the hey, I got to get in at the right price. But who knows when the right price really is? I think that's the big problem. So even as a homeowner, if I find a house that I really like, and maybe I set a price range, maybe I say, okay, 750,000 to 1 million. And as long as it falls within that range, I'm good to go. If it falls maybe a little bit outside, I'll make some exceptions. If it falls way outside, I'm not in. Maybe set some benchmarks, set some targets that you want to hit. And as long as you find a house you really, 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 really like, and you're like, hey, this is the house that I want, then price doesn't really mean much to me.
I love it. All right. Well, Jeff, thank you for going over on time with us. I know you got a busy day. busy schedule. But thanks again, and looking forward to catching up soon.
Likewise, Joe. Thank you.
All right. Thanks. That's Jeff Badu with Badu Tax Services and Serial Entrepreneur. All right. Take care.